Okay, folks, well, welcome to our webinar, Preparing for COVID-19 Recovery, Loan Options, and Forgiveness Strategies. It is November 5th, 2020. It's a beautiful day outside. Sun is shining. It's nice and warm. Get out there if you can, because this is a day you shouldn't waste. But glad that you can come, take a seat. Just want to let you know that this is being powered by SACS, Accounting, Tax, and Advisory Services, sacsllp.com, Saks Wealth Advisors, also known as SACSWA, and S2 Solutions, which is our technology group that we are joint ventured with. So welcome to our webinar. This is the slide in which we tell you that you need to understand that we're providing this webinar presentation for general guidance only. It does not constitute the provision of legal advice, tax advice, accounting services, investment advice, or professional consulting of any kind. In other words, you need to consult with your tax, accounting, legal, or other competent advisors. Obviously, we're here for you as well. Before you make any decisions or take any actions, consult your professional advisor. But we're here to provide you with some information so that you could move forward with all these wonderful things facing us concerning PPP and other loan options. CPE, for those of you who need CPE, just want to remind you, if you really want the CPE, there's some things you must do. First thing, you're going to see some very good polling questions today. You need to answer at least 3 out of the 4 polling questions in order to qualify for CPE. You also need to stay attentive. Believe it or not, we know if you are not on and you just kind of, walked away and did something else. The webinar does record that. And also, you need to stay for the entire 50 minutes, and we must go 50 minutes for you to get 1 hour CPE. And then, of course, if you want the CPE, in the handout section, take a look and see. There is an evaluation form that you need to fill out and send to the email address that's on it. And that's how you get CPE. Here's our wonderful recovery task force. Myself, Todd, Josh, and Steve. I think by now you should know us, but we're happy to announce we have some additions to our family. Here's more of our recovery task force. These folks are been working, many of them behind the scenes, but we wanted to acknowledge them. Angelo, Melissa, Amanda, Julia, and Matt Goldstein. These folks have been working behind the scenes, especially in working with the calculations, the worksheets, and now the PPP software that we are using for our clients. So with that, we're going to go to our very first poll question. Which partner is part of SACS Recovery Task Force but not a webinar panelist? Is it Joe Shannon, Ralph Hyman, or Stu Berger? So one of these is the right answer. Which partner is part of our SACS Recovery Task Force but not a webinar panelist? Kind of operates behind the scenes. Give you some time to select who you think it might be. We have, so far we don't have a whole lot of people voting yet, so we are going to wait for that vote to take place before we close the voting, because remember, you need to at least get 3 of the 4 questions answered. So keep on waiting a little bit longer before there's 53% of you who are answering that question. And it is not a trick question. When you see the answer, you'll know. 61%, a little bit longer. Who is that 5th Beatle? Joe Shannon, Ralph Hyman, or Stu Berger? 66%. Can wait a little bit longer. Okay, counting down. 5, 4, 3, 2, 1. If your answer was Joseph Shannon, that was the right answer. Ralph Hyman, no. Stu Berger, no. It was indeed, there he is, Joseph Shannon. He is part of the task force, and believe me, he is extremely helpful person, a great asset to this task force. He asked all the really difficult questions. We also look to him as our sergeant in arms to keep everyone else straight. So this is today's agenda. Right now we're doing the introduction. We're going to be talking about the loan necessity questionnaire, both for-profit borrowers and not-for-profit borrowers. We're also going to be talking about change in control procedural guidance. So these are some things that are relatively new. By your request, we are doing a step-by-step analysis of the application. We're actually going to go through the application in a little bit more detail. That was a special request by some of you. And then we're going to round it up with a potpourri, which I know Josh is going to do. So I'm turning this over now to my partner, Steve, to start off with the loan necessity questionnaire. Take it away, Steve.
Thank you, Todd. Great introduction. Good morning, everybody. Hope everyone's doing well. A beautiful day today. So let's just get started. So as some of you may have seen last week, the SBA published a loan necessity questionnaire, Form 3509 for-profit entities and Form 3510 for nonprofit entities. We'll go through that. We'll discuss that in a minute, but just want to caution you, this document, either of them, are not in their final form. So there is still a comment period that is open through November 25th, where they're collecting information, collecting responses from impacted borrowers to see whether the collection of information is necessary, whether the burden estimates are accurate, whether there are ways to minimize the burden of gathering all this data and enhance the quality and clarity of the information. We actually published an e-blast earlier this week on November 2nd that can be found on our SACS Resource Center at sacsllp.com. It contains some information in there. Basically, the comment period, as I said, is open. So if you have a comment, and this questionnaire impacts borrowers with loans in excess of 2 million, which we'll go through in a moment, but if you do have a comment about this, and there's a lot of information that needs to be gathered, please take a look at that e-blast and reach out to the people in there, because they want to hear from you as impacted borrowers. But as I was saying, the whole purpose of this questionnaire is to support the good faith certification that was made when you as borrowers initially applied for the loan, which basically said that the economic conditions that made the necessity of the loan required. So basically they want to know why you needed the loan. So as I was saying, borrowers with loans of 2 million or more, and this is in the aggregate, so any related party rules and related management issues need to be taken into consideration as well. So borrowers with loans in excess of 2 million will be required, as it's written now, to respond within 10 days of receipt. So the way it works is that this questionnaire, once the borrower submits for forgiveness to the lender in turn, after they've reviewed the borrower's request, will submit a loan forgiveness request to the SBA, at which point the SBA will contact the lender to have the borrower prepare this loan necessity questionnaire. And depending upon if you're a for-profit or nonprofit business, the information requested is fairly similar. As you see here, from a business activity perspective, the for-profit entities, comparative gross revenue, COVID-19 shutdowns, capital investments, operational reductions and whatnot, NAICS code information. That's from the business activity perspective. Liquidity-wise, they want to know what your cash position is, whether you've paid dividend and or capital distributions other than tax-related debt prepayments, owner and employee comp. There's information that's necessary depending upon whether or not you are a public or private entity, and also if you've received other CARES Act stimulus. So they're basically looking to understand what your position was during, it's essentially Q2 of 2020 compared to Q2 of 2019 to see how COVID has impacted you. And there's a lot of information that's requested here. So again, kind of making this a call to action. And if some of you hopefully have seen the questionnaire, there's a lot of information again. So if you have an opportunity to look through it and feel that it is indeed burdensome, then there's an opportunity to respond. There's another 20 days or so left in the comment period. As far as nonprofit entities, they have similar business activity and liquidity assessments. It's comparative gross receipts, gifts, grants, and contribution, expenses, again, COVID-19 shutdowns, capital investments. They essentially want to know how you use the money, and with, the intention of the PPP was to keep people employed. So they just want to make sure, as of now, that is indeed how borrowers are using the money. So there's also limited space to provide written responses. So if you haven't already, take a look at that questionnaire, take a look at our e-blast, and reach out to us, reach out to your advisor if you have any more questions, because we do believe that this questionnaire in some format or the other will come out. So it's something you're going to want to look at if you are indeed impacted by the threshold, the $2 million threshold. So before I go on to the next section, I'm going to turn it back over to Todd for polling question number 2. Todd?
Okay, polling the question number 2. Guys, get ready to vote, because if you don't actually vote, it doesn't count. Remember, 3 out of 4 times you have to vote in order to get the CPE. How much time do borrowers have after the close of the covered period to apply for loan forgiveness? This is a question that comes up frequently and is discussed often here. Is it 10 months, 4 weeks? There's no requirement to apply for forgiveness, or 2 years. This is the amount of time that you have after your covered period that you're required to apply for forgiveness before you start paying back the loan. So is it 10 months, 4 weeks, no requirement to apply, or 2 years? Go. So let's see, it looks like 44% of you have been voting. We give you a little bit more time. 10 months, 4 weeks, no requirement, or 2 years. And you should get this right, because we've been talking about it for at least a few months, if not much longer. Okay, 5, 4, 3, 2, 1. The correct answer would be 10 months. 10 months is the correct answer when you must apply for forgiveness after your covered period. And we'll talk to you a little bit about why you should not be applying early. Steve, take it away. Give us some more information.
Thank you, Todd. All right, now I'm going to cover the section related to change in control. So if you're contemplating an M&A transaction, you're going to want to listen to this. All right, so effective October 2nd, the SBA released procedural guidance for borrowers considering a change in control. So basically that's essentially a sale of assets, or a sale of stock, or a merger, as it's listed here below. For purposes of the guidance, you see what is deemed to be a change in control. And depending upon the type of transaction you're contemplating, you may or may not need to get prior approval from the SBA before completing your transaction. So on the next slide, we'll go through with what some of those requirements are. So if you've already paid off your note, if you are indeed not applying for forgiveness, or the loan forgiveness process is completed prior to closing, you don't have any lender or SBA restrictions. And just to be clear, completed means the forgiveness decision has been made. It doesn't mean that you've just filed for forgiveness. It means you've actually received the response from the SBA confirming whether or not you get full forgiveness, or whether you're not, you have a note. So in those limited circumstances, you don't need any lender or SBA pre-approval. However, in circumstances where the PPP note is not satisfied, there are transactions that can be approved by the lender without SBA approval. So again, this is the lender's responsibility, but you as borrowers will be impacted. So if you are contemplating these types of transactions, you're going to want to work with your bank. So these types of transactions don't require prior SBA approval. a sale or other transfer of 50% or less of the common stock or other ownership interest. So essentially a less than 50% or 50% or less transfer of equity. Or if you have a sale or transfer of greater than 50% of the equity or 50% or more of the borrower's assets measured by fair market value, and you've submitted a PPP loan forgiveness application and escrowed the funds, then you wouldn't have to get prior approval. But again, this basically means you're putting the funds in a separate bank account because those funds will be designated to pay off the loan in the case where forgiveness is not received. And in the case of an asset sale meeting this criterion, the lender will have 5 business days to notify the appropriate SBA loan serving center of the amount and location of the escrowed funds. So somewhat restrictive if you are indeed going through a transaction of this magnitude. So other change in control transactions that essentially do not meet this criterion require SBA pre-approval prior to the consummation and essentially can't be unilaterally approved by the lender. So the lender and the SBA will need to approve it. So if it's above those thresholds, or if you say, I'm not going to escrow my funds, or I'm not going to apply for loan forgiveness, then you basically have to get pre-approval from the SBA. And we've listed here what those pre-approval requirements would be. Essentially asking why you cannot satisfy the note, details of the transaction, the letter of intent, disclosure of whether the buyer has an SBA or a PPP loan, and a list of all owners with 20% or more ownership in the buyer. So it's fairly substantial. And then the SBA in the procedural guidance indicates that they could ask for additional information beyond what's listed here. And then you see that the SBA has 60 days to render this decision. So this could potentially create a deal if you're not going to escrow the funds and apply for forgiveness. You would have to potentially look to get SBA approval, which if you're at the signing table, then you may have an issue. So something to definitely consider. Other additional restrictions and conditions, if you do have a greater than 50% sale of the fair market value of assets and the SBA approval is required, the buyer, the purchaser assumes the seller's PPP obligations, and the purchase and sale agreements have to have language in there, but you can also submit a separate agreement to the SBA reflecting this language. So also in situations where these equity transactions, basically there's restrictions on the borrower as well as prior to the transaction, essentially the PPP borrower still remains subject to all the obligations under the loan, and the SBA will have recourse against the former owners in situations where the new owners use the PPP funds for unauthorized purposes. So you're not getting off the hook just because you happen to change equity. And similar to the asset side, the equity side also has restrictions in terms of if you're going through these types of transactions, which are listed here, basically identifying the new owners, their new ownership percentage, the tax ID, and the location of the escrowed funds if they are indeed escrowed. And again, a number of restrictions here, but also the new owners and successor owner, in the case where they have an existing PPP loan, the borrower and the new owner are responsible for segregating and delineating PPP funds and expenses and providing documentation to demonstrate compliance with the PPP requirements on a per borrower basis. So what this is saying is that you basically have to keep the loans separate and be able to distinguish the fact that you've essentially gone by the rules for both loans. And in a merger, the successor is responsible for segregating and delineating the PPP funds and expenses. So there are certainly restrictions here. If you're contemplating an M&A transaction, please reach out. The rules are somewhat dense, but we can help you go through it and understand just what your responsibilities would be in the case of a sale of assets and or an equity transaction. So with that, I'm going to turn it back over to Todd for the third polling question. Todd?
Okay, before we go to the third polling question, just something I want to announce is that we're going to go through a whole section of walking through the application, the long form. So my suggestion is in the handouts, if you see there are a series of different handouts, I want you to pick out the long form to go through, and that relates to the next polling question. So let's see the next polling question. What form do I need to grab from the handout section of this webinar to review along with our presenters? Is it the Form 1040, the Form 3508, the Form W2, or the Form 1098? Which form would that be? Okay, looks to me like it looks like it was canceled. So I guess we're going to have to tell you what form it would be. It would be Form 3508. That's the form. Okay, folks, jumping back into the webinar. If you would be so kind as to pull out of the handouts the 3508 and follow along if you like, because we're going to do a step-by-step analysis of this form. So just so you know, there's actually 3 different forms that you can use if you receive one of these loans. The 3508, which is the one that is the long form, which most borrowers will use. The 3508EZ, if you meet the qualifications. And the 3508S, if your loan balance is $50,000 or less. So if we're looking at the actual form, if we're looking at the first page of the form, you have 3 different sections: payroll and non-payroll costs, adjustments for a full-time equivalency, that's FTE, and salary/hourly wage reductions, and potential forgiveness amounts. So when we're looking at this form, those are the 3 main sections that we are concerned about. So let's talk about the payroll and non-payroll costs. This is kind of the meat of it all. This is what you're reporting and then hopefully being forgiven related to the loan amount. The first line is the payroll cost, which you will enter the amounts from PPP Schedule A, line 10, and we're going to actually show you more detail about that PPP Schedule A, line 10. The second line is business mortgage interest payments. The third line on the form is business rent or lease payments. And remember, related party rent or lease payments are limited to mortgage interest owned on the property. And then finally, line 4, which is business utility payments. So per section 1106 of the CARES Act, utility payments include payments for the distributions of electricity, gas, water, transportation, telephone, or internet service. Per loan forgiveness non-payroll costs, FAQ number 6, a service for the distribution of transportation refers to transportation utility fees assessed by state and local governments. And per the interim final rule, dated April 14th, 2020, gas used in driving business vehicles is an eligible utility for Schedule C borrowers. But folks, remember, this is still an open question whether or not this applies to all borrowers or just Schedule B borrowers. Okay. Let's continue. So the next section relates to salary reductions and the FTE reductions and forgiveness calculation. Line 5 is the total salary wage reduction, which you're going to actually enter that from PPP Schedule A, line 3. And we're going to go over that, how you come up with that number. Line 6, you're adding the amounts on lines 1, 2, 3, and 4, and then you're subtracting the amount that's entered in line 5. And line 7 is the FTE reduction quotient. You're going to enter the number from the PPP Schedule line 13, which we're going to go over. And in the end, on line 8, you're multiplying the totals. So that's line 6, which is all those different items that we talked about above, by line 7, which is the FTE quotient, which is going to give you a modified total amount. Then you're going to also enter your PPP loan amount, and line 10 is also going to be reduced by your payroll costs. 60%, there's a 60% requirement, folks. So if you didn't use the funds at least 60% or more on payroll, that's going to impact on the amount of forgiveness. And then you finally get that magic number, line 11, the forgiveness amount. Okay. Salary reductions. Remember that even though you may have spent all the money, you may be impacted by having the hourly rate or the salary rate reduced for your employees. So if there's a reduction in excess of 25% of an employee's salary or wages, that's going to impact this. So let's kind of talk about what that means. First, that relates to any new 2020 employees and or each existing employee who is not paid more than $100,000 annualized in any 2019 pay period. So the borrower must reduce total forgiveness amount by the total dollar amount of the salary or wage reductions in excess of 25% of base salary or wages, and note the period between January 1st, 2020 and March 31st, 2020. The reduction calculation is performed on a per employee basis. Yes, you need to look at each employee and calculate this by employee. And then the reduction calculation goes across the entire covered period, irrespective of whether an early application is filed. This is the reason why if you are choosing the 24-week period, you might want to wait until that entire period is done, because if you have a reduction related to a particular employee, if you apply for forgiveness before that 24-week period is up, that reduction goes across the entire period, not just the period from the beginning of the covered period to the date in which you're applying for forgiveness. So that's one reason why we're encouraging some people to wait for the full 24 weeks. And to ensure that borrowers are not doubly penalized, no double jeopardy, the salary wage reduction only applies to the portion of the decline that is not attributable to the FTE reduction. So they were nice enough not to hit you twice. So if you're having salaries reduced, it's not going to also impact your FTEs. Okay, FTE rehire exception summary. So remember, there are certain outs, so that if you meet these outs, you're not going to be impacted by for your FTE. And that is, if you restore employees that are terminated or furloughed between February 15th, 2020 and April 26, 2020 by December 31st, 2020, that's the magic number or the magic date. That's one of the exceptions. Remember, in all these, you need to maintain written documentation of employees that are fired for cause, employees who voluntarily resigned, employees who voluntarily requested and received a reduction in hours, employees whose hours were reduced, and the employees who refused and offered to restore hours at the same salary or wage. Make sure you document everything. Safe harbor number 1, good faith documentation of an inability to rehire personnel who are employees as of February 15th, 2020 as well as an inability to rehire similarly qualified employees by December 31st, 2020. So that's safe harbor number 1. And we also have safe harbor number 2. Again, good faith documentation of an inability to operate between February 15th, 2020 and the end of the covered period at the same level of business activity as before February 15th, 2020 due to compliance with requirements established or guidance issued between March 1st, 2020 and December 31st, 2020 by the Secretary of Health and Human Services, the Director of Centers of Disease Control and Prevention, or the Occupancy Safety and Health Administration related to the maintenance of standards for sanitation, social distancing, or any other worker or customer safety requirement related to COVID-19. You need to document this if you weren't able to operate, and you'll get the FTE exception. All right, moving on to PPP Schedule A. So remember, we talked about that first line on the application where you need to put your payroll costs. It's making reference to PPP Schedule A, line 10. So this is kind of the breakdown that leads you to line 10. There's the PPP Schedule A worksheet, Table 1 totals. I'm going to show you that. PPP Schedule A worksheet, Table 2 totals. The non-cash compensation payroll cost during the covered period or the alternative payroll covered period, compensation to owners, and then all the total payroll costs, which then is line 10 that goes on to the very first page of this beautiful application. So let's start. So we're talking first about the Schedule A worksheet line that talks about Table A. So line 1 is to enter the cash compensation, box 1, from the PPP Schedule A worksheet, Table 1, which we're going to look at in a minute. Line 2 is the entering the average FTE, box 2, from the PPP Schedule A worksheet, Table 1. And line 3 is to enter the salary/hourly wage reduction, box 3, from PPP Schedule A worksheet, Table 1. And if the average annual salary or hourly wage for each employee listed on the PPP Schedule A worksheet, Table 1, during the covered period or the alternative payroll covered period was at least 75% of such employees' average annual salary or hourly wage between January 1st, 2020 and March 31st, 2020, you check the box and you enter 0 on line 3. So you get that out. All right, so this is what the Table 1 looks like on that worksheet. First, you need to know what's the difference between Table 1 and Table 2. Which table should you use? So for Table 1, you're including employees. And remember, you're including it employee by employee, that's right, that were employed by the borrower at any point during the covered period or alternative payroll covered period. First, those employees whose principal place of residence is the United States, and second, who received compensation from the borrower at an annualized rate of less than or equal to $100,000 for all pay periods in 2019 or were not employed by the borrower at any point in 2019. And you can see the different columns there, the employee's name, their identifier number, their cash compensation, their average FTE, and whether or not there was a salary or hourly wage reduction. So that's Table 1, and it's for folks who you didn't pay, their annualized rate is less than $100,000 or they weren't around in 2019. So let's talk about Table 2. Line 4 on the PPP Schedule A, you're going to enter the cash compensation of box 4 from the PPP Schedule A worksheet, Table 2, and you're also going to enter the FTE box 5 from PPP Schedule A worksheet, Table 2. So let's take a look at that table. Here it is. So what's the difference? This particular table, Table 2, you're going to list employees who were employed by the borrower at any point, I'm stressing that, during the covered period or the alternative payroll covered period, whose principal place of residence is in the United States and who received compensation from the borrower at an annualized rate of more than $100,000 for any pay period in 2019. So folks, notice what's missing from that table. That's right. The reduction in salaries or hourly wages missing because that was excluded for employees that were getting more than $100,000. That was written into the rules. Same columns, name, identifier number, cash compensation, and also average FTE. And you can see the boxes. Kind of bring those totals and you bring them up to the Schedule A worksheet. All right. So the next section on the PPP Schedule A is the non-cash compensation, payroll costs, and owner compensation. Line 6, total amount paid or incurred by borrower for employer contributions for employee health insurance. This is the employee health insurance contributions you're making for your employee for the covered period. Line 7, total amount paid or incurred by borrower for employer contributions to employee retirement plans. So these are the employee benefit plan numbers. Line 8, total amount paid or incurred by borrower for employer state and local taxes assessed on employee compensation. Now this is, again, the employer is paying this for the employee. It's not the employee's portion, it's the employer's portion. And then line 9 is actually something separate. It relates to the owner compensation, the total amount paid to owner employees / self-employed individuals / general partners. And as the instructions say, this amount may not be included in PPP Schedule A worksheet table 1 or 2. And if there is more than one individual included, you have to attach a separate table that lists the names of and the payments for each. You can see this is pretty much involved. Total payroll costs. Okay, so this is the line that's on the first page that you want to get to. You're adding lines 1, 4, 6, 7, 8, and 9. So you're entering the cash compensation box 1 from the PPP Schedule A worksheet table 1. Those are the employees who were making less than $100,000. Line 4, you're going to enter the cash compensation box 4 from the PPP Schedule A worksheet table 2. Those are the ones who are making more than $100,000 annualized. Line 6, that's the amount paid or incurred by the borrower for employee contributions for employee health insurance. Line 7, the total amount paid or incurred by borrower for employer contributions to employee retirement plans. Line 8, the total amount paid or incurred by a borrower for the employer state and local taxes assessed on employee compensation. And line 9 is the total amount paid to the owner employees, self-employed individual general partners. And that's your line 10 of payroll costs on the first page. All right, and then, as we talked about earlier, we've got this wonderful FTE reduction calculation. You need to know this. So line 11 is the average FTE, and it's during the borrower's chosen reference period. So you have a choice. You can either choose February 15th, 2019 to June 30th, 2019, or you can choose January 1st, 2020 to February 29th, 2020. So you get to pick that. You get to pick what your reference period is, what you're comparing everything to. Line 12 is the total average FTE. So you're going to add lines 2 and 5. When line 2 is the average FTE box 2 from PPP Schedule A worksheet table 1. I think you remember who those folks were. And line 5 is the average FTE box 5 from the PPP Schedule A worksheet table 2. I think you know who those are. So you're coming up with your total average FTE. And then line 13 is the FTE reduction quotient. You're going to divide line 12 by line 11, or you're going to enter 1.0, okay, if any of the above criteria was met. Those were the criteria that we talked about earlier about the FTE exceptions. So go back to that if you want to refresh your memory. And then as far as the average FTE calculation, you're going to take each employee, you're going to divide the average number of hours paid per week by 40, and you're going to round the total to the nearest 10th, and you're going to cap it at 1.0, okay? So you're going to round it to the nearest 10th. Or you can use the simplified method that assigns 1.0 to employees who worked 40 or more hours per week and 0.5 for all other employees. So if you worked 37.5, sorry, you get 0.5. But remember, you're comparing the average FTE for the covered period to this reference period, and hopefully you're doing the methodology the same. In fact, you have to do it the same so that you're measuring, you know, apples to apples and oranges to oranges. Which brings us to something that we're doing for our clients. We mentioned it in other webinars. Just want to kind of refresh everyone's memory. What we talked about, you can do all that we talked about manually if you want, and we do have worksheets as well available, but we do have a tool that we are using for those people who are clients or those who would like to work with us of Forgiveness Tool, and some of the features of that tool. You can manage your application in one place. It allows for forgiveness applications for multiple businesses. You can do bulk upload of information. You can directly input payroll values for authorized payroll from authorized payroll reports. So there's certain payroll companies that are connected to this software where we can automatically upload information. You can preview the 3508 form before signature, which I highly recommend that you review it before you actually sign it. Instant verification of payroll, utility, and bank account transaction data is available through secure integrations to trusted third-party systems, and it creates a zip file with all this information that can be sent to the bank. But caveat, we have to say this, the banks may want more information than this. The banks may not accept this information, but folks, this is something that will be a check to make sure you're doing everything right. And I think you should check that before you actually submit the application, because I don't know at this point if once you submit that application, if you can just retract it and say, no, that was wrong. So we are offering our services. This is additional service. Happy to talk further with you. Just contact us. We'll send you some, at the last slide, we'll tell you how you can contact us if you haven't contacted us before. All right, we're going to polling question number 4. What form did I need to grab from the handout section of this webinar to review along with the presenters? Was it Form 1040, Form 3508, Form W2, or Form 1098? Okay, vote. Come on, give me a chance to vote, folks. And if you get this wrong, I'm going to really be very, very sad. Keep on voting, keep on voting, keep on voting. We are going to do another polling question, because obviously we had a technical screw up in that we canceled this particular question before. But I know you didn't notice, but so that you don't get nervous, you will get the 4 polling questions so that you can get the CPE, but you need to vote for this one. And then give you a few more seconds, because this should be pretty easy to pick out. Although I do see that someone picked Form W2, which means either you're a smart aleck or you really aren't paying attention. So 5, 4, 3, 2, 1. And if you didn't pick Form 3508, then there's something wrong. I don't know what to do for you. Okay, next. Going to go on to the next item. Whenever you're ready. Oh, we're doing this twice. We're doing this form twice? What form did I need to grab from the handout section of this webinar to review along with our presenters? So, folks, I guess we're asking this question twice. Form 1040, Form 3508, Form W2, or Form 1098. Okay, if you're voting again, that's great. We are now going to turn this over to Josh, who's going to do the section called potpourri or potpourri. Josh?
Thanks, Todd. So this is a potpourri of just some of the things that we want to bring back up, kind of bring everybody up to speed. So first, again, just want to bring this back. The EIDL loan is still available. I know the funds in the program are being depleted on a daily basis, but again, it's still open for those of you in need of funding. There is available up to $150,000 per entity. And again, it's still similar to the requirements for applying for PPP. It's subject to eligible small businesses. The program currently is scheduled to end the end of the year. In the beginning, if you remember back to April, there were certain personal guarantees and collateral requirements on these loans. As the loan amounts have gone down, so has the requirements as well. The $10,000 advance is no longer available. Remember, we're going to talk about, again, just a refresher on how that advance impacts PPP on the next slide. It is a detailed application process through the SBA, although not nearly as detailed as it sits today as if you applied back in April. And just remember again, too, this is a traditional loan with a 30-year amortization. For nonprofits, it's 2.75% interest rate, and for for-profits, it's 3.75% interest rate. And payments on this loan do not begin until a year after the funding is received. What are the loan proceeds able to be used for? Well, it can, provide paid sick to employees unable to work due directly to COVID-19. You can use it for payroll as long as the PPP money has been spent. You can use it on your ordinary course of payables. You can make rent or mortgage payments, and you can repay obligations that cannot be met due to revenue losses. Still, you're not supposed to use this money to take out old debt, so that refinance provision is still very much intact. And then how does it interact with PPP? Well, if an EIDL was received between January 31st and April 3rd, and it was not used for payroll costs, then there's no impact on PPP. If the EIDL was received from January 31st and April 3rd, was used for payroll costs, then the PPP loan must have been used to refinance the EIDL, and that would impact your forgiveness. And again, the $10,000 advance, if you did receive it, reduces your PPP loan forgiveness as well. So that is on the application. It does ask about the EIDL loan, what you received, when you received it, and again, it will affect your calculation depending upon some of those factors. Just an update too on Main Street. So if you remember back a couple months ago, back all the way back to May, this was a loan program that the SBA had put out that was going to be administered by the banks. Available loans were based on certain criteria and provisions, but were calculated based upon a fact of EBITDA less debt. And as you can see, 600 billion was allocated to the program. To this day, only 3.7 billion in loans have been administered, which is a total of only about 400 loans. So the program itself has not been successful. So what are they doing? They are decreasing minimum loan sizes down to make them more available to everybody. So we'll see if this is something as a result of this that ticks up, over the next couple months. This is one option for folks out there who need money. It's a very tough environment right now. We know the underwriting process is tough. So again, this is just another option for people who are in desperate need of capital to continue to run their business on a day-to-day basis. So if you wrote it off initially and, like I said, you're still in need of money, then maybe it's an old conversation to kind of dig up. But try Main Street. Okay, so the million-dollar question that's on the table is, when should I apply for forgiveness? Now, we understand, the desire and wants to really put this whole process behind us and move forward. Again, we just want to point out there's still issues here, to be resolved. Certainly, the first question is, do you really want to be the first one? There have been continuous changing rules. Steve pointed out before, new FAQs, new IFRs. We know that the lenders are accepting the loan forgiveness applications, but is the SBA at this point? I've heard of maybe one or two situations where loans have been kicked up to the SBA, but based on the amount that have been submitted to this point, we're not sure as to how quickly your process really looks like. As mentioned before, there is a 10-month post-covered loan. There's a 10-month period after the close of the spend period to submit the application. There's some people who may still wait around to see if they increase the automatic forgiveness, right? As we know, currently it's $50,000. Those of you who will file the 3508S, but there is some hope out there that that the loan amount will be increased to 100,000, maybe 150,000, depending upon, I think it's going to depend upon, the banks and their ability to process and handle all the applications. So maybe as, like I said, a lot more applications fall into the pool, and that 60-day clock starts on their end, that, maybe it'll come to fruition that it's just too much work. So stay tuned on that one. I think this is something that's continuing to get better, but a lot of you who are going to go to 24 weeks are probably going to be in a position where you're only going to submit reimbursement for payroll. So the reporting aspect of it that's coming from the payroll companies in terms of wages and allowable taxes and FTEs and headcount becomes, pretty much everything. So if you are running reports, you have to double check them and make sure that they're accurate. The next one is as Steve mentioned at the beginning, this loan forgiveness questionnaire was put out for the public for loans over $2 million. There is a 30-day comment period attached to it. So at the end of 30 days, we'll see if anything changes. What changes with the election? Certainly at this point, we don't know who the next president will be, but will there be PPP CARES Act 2, and how does what happened with PPP CARES Act 1 potentially impact PPP CARES Act 2? We're still not 100% sure at this point what the impact on taxes will be. We know that the cancellation of the loan is not taxable, but as of now, the expenses related to that cancellation are not deductible. So it's been tossed around many times that maybe they will, maybe they won't, but at this point, there is no certainty. We're still not sure how the state taxing jurisdictions will treat the forgiven funds. And something else as it relates to tax planning is there's nothing concrete that's been said specifically to how forgiven payroll costs impact QBI and/or R&D. So again, two things that affect many of our clients and businesses who we work with. We're still not 100% sure to this point how borrowers document the FTE rehire exceptions and what, again, the bank or the SBA will be looking for in order to make sure that those exceptions hold true. And the last one is, how will the FTE rehire exceptions apply if borrowers apply for forgiveness before the end of the covered period? How does the December 31st, 2020 deadline impact this? So again, going back to what I said initially, I get it, wanting to move forward. But again, I think every loan is specific to the business and the company or the nonprofit, and I think you really need to evaluate kind of where you're at and whether or not any of these things have a significant impact on your business. And again, the biggest takeaway, as it always is you really need to consult your advisor with respect to this, as there are multiple aspects and multiple sides of it. So the last piece of the potpourri is, what do the banks say? What's going on? Certainly, we have many contacts at banks and have had conversations with them as to what conversations they're having with their customers, what conversations they're having with their SBA counterparts. So just want to share with you some of the feedback and some of the things that we've heard. So one is, a lot of banks have been doing their own internal audits of these loans, and if they're determining that loans went out for incorrect amounts, whether you included certain non-allowable expenses such as maybe a Social Security or Medicare, or you included 1099s, or if you were an industry who didn't meet the NIACS code requirement, they are sending letters and asking, and recalculating loans and asking for immediate repayment of the difference. So, hopefully you haven't received those letters, but we certainly know that some of them have gone out, and they have to be dealt with. Another thing that we are hearing, and again, this is also consistent with the initial application, is that some banks will have their own version of the forgiveness application, just like they did with their own version of the loan application. So, if you're taking the time to fill out the SBA form, that's probably still the best check, but double check with your own bank and see what version, if it's the SBA version or if it's their own version, that is what they're looking for. We do know that some banks will outsource the review of the loan applications to third parties, just because they don't have the infrastructure to handle, the tremendous amount of applications that will come in through the door. And again, they do have a tight window to go through everything and send those up to the SBA. So, so we do know that. Also, too, it kind of remains to be seen the position the banks will take with respect to certifications, and is that their responsibility? As you know, the banks are responsible for reviewing your applications and all the support. We're not 100% at this point, what it is they'll ask for in addition to the support for those expenses. And I do think, that the banks will expect to take a very by the book approach to forgiveness. I think they're gonna, if you ask questions of them, I think they're going to point you back in the direction of your accountants and your trusted advisors. Again, remember, they, from our standpoint, this is an important process for them, and I'm sure they want to do the right thing. For the SBA, is they're kind of the conduit for the loans. So again, that also remains to be seen. But from the early set, that's kind of what I think we would expect, is for them to be very, very by the book. So again, those are just things that we're hearing. Certainly reach out to your bank, let them know where you're at with respect to forgiveness, and at least if you have any weird scenarios or questions up front, probably better to get those out on the table than wait 6-7 months from now. So that's what the banks are saying. Okay, so with that, that's it. We want to thank everybody for attending today. We had a large crowd. There are some upcoming webinars. The next one is Tuesday, November 10th. The year of the pandemic, insights from the front lines, and also Wednesday, November 18th at 10 a.m. Our CFO Focus will have a year-end tax update. Hear from our experts, and of course, you can always email questions, concerns to COVID-19 at Sachs LLP, and visit our resource center at sacsllp.com. I'm going to toss it back to Todd. I think we're going to try and bring back up the one poll question that we couldn't get going before. Is that right, Todd?
Right. So we're going to deal with our technology wardrobe malfunction here by giving you one more chance to do a polling question. So those of you who really want the CPE will get it. So hopefully you stuck it out until 11:02. What was Sachs Wealth Advisors ranked on Accounting Today's list of the top 150 firms by assets under management? Was it 10, 29, 48, or 72? 10, 29, 48, 72. So vote if you want to get your last polling question in to make up for our technology wardrobe malfunction. We'll give you some time to vote. A little bit longer, guys. Get those votes in. Okay, we're going to count down 5, 4, 3, 2, 1. And the correct answer would be number 29, which 42% of you got it. Folks, thank you so much for joining us. We will be back again. Not quite sure the exact date, but perhaps certainly after Thanksgiving, if not sooner. Certainly as things develop, we will be sending out e-blast, and you can always contact us at COVID-19@sacsllp.com. Enjoy this beautiful day and take care and be safe.